Welcome to your daily news impacting the markets. Apple has officially cemented its place in Hollywood, with F1 crossing the $500 million mark at the global box office, its most successful theatrical release to date. F1, produced by Apple Original Films and distributed by Warner Bros. Discovery, the movie has surpassed the company's previous record set by Ridley Scott's Napoleon at $221 million. The racing drama, which stars Brad Pitt and was shot using IMAX cameras, benefited from a strong 3-week exclusive IMAX release window. This marks a major milestone for Apple, which has only recently started releasing its films widely in theaters. Other titles like Killers of the Flower Moon, $158 million, Argyle, $96 million, and Fly Me to the Moon, $42 million, fell short of this box office benchmark. Apple's foray into the film industry has been a strategic move to bolster its streaming service, Apple TV+. A July 2024 report said Apple was in talks with major Hollywood studios to license more films for Apple TV+, aiming to grow its content library and attract a broader audience. Moreover, Apple's decision to make its Apple TV app available on Android devices earlier this year demonstrated the company's commitment to expanding its streaming services' reach. In other news, President Donald Trump has declared a 15% tariff trade deal with the EU, putting an end to several months of trade uncertainty with the U.S. biggest trade partner. The tariff rate is a significant drop from the 30% Trump threatened on July 12th and the 20% he proposed on April 2nd. Trump stated that the EU will not impose a tariff on U.S. imports, describing the deal as satisfactory to both sides. According to the report by NBC News, Ursula von der Leyen, the president of the European Commission, echoed Trump's sentiment, stating that the pact will bring stability and predictability, which are crucial for businesses on both sides of the Atlantic. Despite the agreement, Trump confirmed that the 50% tariffs on steel would remain unchanged. He also hinted at the possibility of further tariffs on pharmaceutical products, a sector where Ireland is a significant source. Trump has previously threatened 200% tariffs on such goods. As part of the agreement, Trump stated that the EU will purchase $750 billion worth of energy from the US and invest $600 billion into the country. The EU nations will also be purchasing a significant amount of military equipment, though the exact amount is yet to be determined. The agreement mirrors a recent trade deal with Japan, where Japanese imports will face a 15% import duty. However, last year, the US tariff on imports from the EU was just 1.2%, according to Capital Economics chief Europe economist. This agreement marks a significant shift in the US-EU trade relations, which have been marked by uncertainty and tension in recent months. The reduced tariff rate and the EU's commitment to purchase energy and invest in the US could potentially boost the US economy. However, the unchanged tariff on steels and potential tariffs on pharmaceutical products could pose challenges to certain sectors. The impact of this agreement on the global trade dynamics remains to be seen. In other news, Circle Internet Group has been a standout stock in 2025, with a remarkable 129% increase since its IPO. However, CNBC host Jim Cramer has raised concerns about the company's future in the stablecoin market. Cramer has expressed skepticism about its long-term competitive advantage in the stablecoin sector, as reported by Insider Monkey on Saturday. Quote, "I question whether Circle is going to be proprietary," end quote, Cramer said. He also went on to say, quote, "Because anyone can set up a stablecoin, there's nothing proprietary about what they have, and that's my point," end quote. He also voiced his reservations about the company's future, stating, quote, "It can be any part of the PARC's Circle Internet Group, the red-hot recent IPO that I'm not particularly fond of, because it's a stablecoin play, and pretty soon, because of that Genius Act, I think it'll be flooded with stablecoins," end quote. Despite its recent success, Circle has been the subject of mixed opinions. Compass Point downgraded the company's stock rating from neutral to sell last week and significantly reduced its price target following the latest US stablecoin legislation. This move came amid concerns about Circle's long-term economic prospects at its current $53 billion valuation. However, Citigroup has expressed confidence in Circle, seeing a 30% upside in the stock and backing the company as a key player in the stablecoin market. The endorsement from Citi suggests that Circle Internet Group's upward trajectory is far from over. In other news, Elon Musk-led Tesla has confirmed signing a massive $16.5 billion chip manufacturing deal with Samsung Electronics. This marks a major win for the South Korean giant's foundry business, as it fights for dominance in the booming AI chip market against rivals like Taiwan Semiconductor Manufacturing Company. On Monday, the South Korean tech giant disclosed in a regulatory filing that it had secured a multi-billion-dollar chip production contract with an unnamed global client. The deal, which officially began on July 26, 2024, runs through December 31, 2033. While Samsung initially declined to name the counterparty, Musk later confirmed via X that Tesla is the customer. Musk revealed that the chips would be built at Samsung's new Texas fab and would power Tesla's next-generation AI6 chip, stating, quote, "The strategic importance of this is hard to overstate," end quote. He added that the TSMC will handle AI5 chips with production beginning in Taiwan and later moving to Arizona. In a follow-up post, he said, quote, "Samsung agreed to allow Tesla to assist in maximizing manufacturing efficiency," end quote. He also added, saying, quote, "I will walk the line personally to accelerate the pace of progress," end quote. The deal offers a potential turnaround for Samsung's foundry arm, which has faced delays at its new Texas plant and struggles with advanced 2-nanometer yields. It also comes as South Korea races to secure U.S. trade agreements to avoid steep tariffs on chips and other exports. Samsung shares were up 2.43% at the time of writing this. In other news, President Donald Trump is mulling over the idea of issuing rebate checks to Americans, funded by the new tariff revenue collected by his administration. Trump, before his departure for Scotland, stated that a lot of money is coming in through tariffs. He hinted at the possibility of issuing rebate checks to Americans when asked on the same by reporters. Quote, "We're thinking about a little rebate, but the big thing we want to do is pay down debt. But we're thinking about a rebate," end quote, Trump stated. The rebate could be aimed at people of a certain income level, though the specific income threshold is yet to be determined, reported Forbes. The federal debt has surpassed $36 trillion and is expected to grow further following the enactment of a new tax cuts and spending bill signed into law on July 4th. Economists and policy institutes project that the One Big Beautiful Bill Act could add $3.4 trillion to the national deficit over the next 10 years. The U.S. Treasury Department announced that customs duty collections have exceeded $100 billion in a single fiscal year for the first time. Treasury Secretary Scott Bessent told Fox Business that this figure could potentially grow to $300 billion annually. Trump's consideration of rebate checks funded by tariff revenue comes amid a period of significant economic activity. Despite initial concerns, Trump's aggressive tariff policy has attracted a flood of foreign inflows, with investors buying American securities at a record-setting pace. This move, coupled with the potential for tariff-funded rebate checks, could have a substantial impact on the U.S. economy and the financial well-being of its citizens. And that's your daily news impacting the markets. Be sure to subscribe and follow Benzinga daily to stay up to date.